Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
What's up, everybody? Dave Bartosiak here, along with Ben Rains, and we've got your top stock pick of the week. I'm going to go ahead and go first with mine. It is Intapp, ticker INTA. It is currently a Zacks rank number 2 buy in the internet software industry, which is in the top 30% of our Zacks industry rate. Intapp is a software as a service model, so a lot of annual recurring revenue or that sticky money. And basically, they target the financial services industry and professional services overall, which is like something like a $3 trillion industry, but specifically financial services for those folks. And they're trying to do generative AI within a cloud-based service. So some lofty goals here. And with that, you see these lofty revenue projections. Current year, 15% growth there. Next year, 14.69. Although when you look into their investor presentation, they're a lot more bullish than this. On the earnings side, 37% earnings growth this year, 40% earnings growth next year. So those are really nice numbers. And recently, these estimates have been going to the upside. Over the course of the last 60 days, you have 2 analysts up in the ante for the current quarter, 3 for next quarter, although 3 have dropped for next quarter. But the consensus really comes in the current year. You got 6 analysts pushing the upside with only a single analyst dropping it. And then next year number, you have 4 analysts pushing up. So those are really nice numbers. One thing I love to look at is our price consensus and EPS surprise chart here on Zacks.com. And here you can see shortly after the IPO, the stock rallies up close to $40. Now these estimates have stayed moving in the right direction. Whenever you see this bottom left to top right, that's great. That means that they're not over-promising and under-delivering. Everything's moving in the right direction, moving to the upside. And you had some big earnings beats. But even while you had those beats, stock came down. That's the sort of divergence I like to see, the divergence between estimates going up and the stock price going down, right? So that's the opportunity. Now, the bad news is, am I late to this opportunity? I mean, sure, it would have been great to buy the stock under 15 now that it's, almost 50. But still, I like where this is heading. I like that these estimates are taken to the upside. And you do have a bit of a pullback there that was bought, and now we're right back to all-time highs. But the good part is that these estimates are still higher than they've ever been, and they're moving in the right direction. So I think what you're going to see with this stock is the volatility is going to reel in a little bit as these estimates continue to come in year over year consistently, and you should see a nice trajectory to the upside if the company can stick with that. All right, that's all I got for your top stock pick of the week. Mr. Rains, what do you have for us, buddy?
Thanks, Dave. Hello, everybody. I'm Ben Rains, and my top stock pick of the week here at Zacks is Cameco, which trades with the ticker CCJ. Cameco is a Canadian uranium miner and a leading supplier of uranium refining, conversion, and fuel manufacturing services. Cameco is actually the second largest uranium producer in the world, according to the World Nuclear Association. It is driven by 2 of the highest grade mines on the planet, which are located in northern Saskatchewan, Canada. So northern Canada. Cameco is really well positioned to benefit from its standing as an established miner and refiner in a stable part of the world. Cameco is really one of the only viable large-scale uranium miners that most regular retail investors can buy unless they're buying into an ETF. Uranium is in high demand again as the world continues to go full steam ahead on the nuclear energy capacity ramp up. The rapid revival of nuclear power sent uranium prices soaring to the highest level in roughly 15 years. So it went from $25 in 2019 to just above $100 in January 2024. Prices have fallen from then. They're currently around $80, but that's still up over 50% from where they were in early 2023. Alongside rising demand comes supply worries, made worse by a pretty tricky geopolitical situation at the moment. So Russia reportedly supplies around 14% of the global uranium concentrates, while Kazakhstan produces 43% of the world's total uranium. So for reference, OPEC members produce about 40% of the world's crude oil. So that's kind of the market share that Kazakhstan produces. Several weeks ago, the CEO of one of the world's largest uranium miners, which is based in Kazakhstan, recently said that the war in Ukraine is making it harder to supply uranium fuel to the West. And there's also some sanctions now that the U.S. government's going to roll out on Russia as well. So that's big news for Cameco. And then restarting the U.S. uranium industry won't happen overnight. So that's kind of the bullish case behind Cameco in the broader uranium market. On top of that, nuclear stocks and uranium miners soared on Friday after Constellation Energy announced that it landed a 20-year power purchase agreement with Microsoft as their AI efforts are trying to have it go all in on nuclear energy stocks. And we should note that, for nuclear energy in general, we should note that nuclear energy is back full steam ahead with 64 new reactors under construction around the world, with 110 additional ones planned as well. So overall, in late July, so July 31st, Cameco said that its 2024 outlook remained, quote, on track. And its CEO said at the time that the full cycle support is emerging for nuclear energy, reinforced by positive public opinion, promising policy decisions, and market-based solutions. So now we're going to go ahead and dive into some of the more data on Cameco. All right, so we're on the Zacks.com ticker page for Cameco. We can see that it's up, as I'm recording this on Monday morning, it's up about 4.2%. This is after a huge surge on Friday after that Constellation Energy and Microsoft news. Now we're going to go ahead and if you also note real fast that it does pay a dividend. It's yielding a very small amount at the moment, but it's worth noting that it pays a dividend. And it's currently a Zacks rank number 3 hold. But I'll show you here that if we look at some of its most recent estimates, they're trending heavily in the right direction. So at the moment, we're calling for about 16% revenue growth in 2024, and then another 9% revenue growth next year. Then on the bottom line, we're calling for 60% adjusted earnings growth this year, and then another 92% adjusted earnings growth next year. And we can see, if we look here, this is obviously not the best, that it was at $1.38 per share 90 days ago, but we're trending back in the right direction. And for here, we're trending back in the right direction as well, with 2025 estimate trending heavily upwards. And we can see the current quarter, the most accurate, so the most recent estimates we have, 39% improved for the third quarter, up about 3% here for 2024, and up 5% for 2025. So that's a good thing to know, that the earnings estimates are trending back in the right direction. They have gone heavily in the wrong direction alongside the fall in uranium prices off those those highs of around $100. It's still, uranium still at around $80, which is up 55% since the start of 2023. So that's some of the reason, the larger pullback, but more recently, its estimate revisions are trending in the right direction, which is a positive sign for Cameco. And overall, as I mentioned again, really impressive stuff here with 16% top line growth, 9%, and then 59, so nearly 60% and 92% growth expected. And then I want to show this chart. As I said, this was those peaks in 2024. We've come back heavily off those levels, but we're trending right back in the right direction. So we can see that easily move higher. Currently trading 31% below its average Zacks price target, and it's getting a little bit more love from Wall Street. So 11 of the 13 brokerage recommendations that we have are coming in at strong buys, with 2 more sitting at buys, and we have 1 more total brokerage recommendations today as we did 3 months ago. So that's always a positive sign to see it gaining more momentum on Wall Street. I'm going to go ahead and take a look at its price performance chart. So we can see this is over the last 3 years. Cameco is up about 115%. And then I'll go over the last, we'll do max here. So we can see it went on a massive run, and this is what I want to focus on. Cameco finally broke above to brand new all-time highs earlier this year. So it looks like right at the end of May, and it fell back off those levels, but we'll see it's finding support here. And then I'll go to some technical charts so we can see that its recent rebound is a positive sign. So we're back, this green line's the 50-week moving average. So it's back above that 50-week moving average, which is a positive sign. And then if we go over to the 1-year chart, we can see that it's trying to climb right back above that 200-day as we speak, which would be a good sign as well. So that's where we are from a technical level, that it found support. It's getting back above that 50-week and now trying to get back above, as we record this, back above that 200-week moving average. And I'll quickly just look at the valuation chart, which is a little skewed because some of the numbers during COVID for uranium got a little wacky, so it's already got a little weird. So we're just going to do the last 3 years here for Cameco. We're trading at 29.3 times forward 12-month earnings. So there's been some wild spikes, but nothing over the last several years that it's out of whack. It's now trading, we'll see We'll go to the last 2 years, a little bit easier to read. It's trading slightly above its 2-year median, and then we see these spikes up when some of its estimates got a little out of whack. But overall, trending in the right direction in terms of its valuation, along with getting back above those key technical levels at the moment. So overall, the world's going all in on nuclear energy again to help drive the energy transition, and Cameco looks like it's one of the stocks to consider buying and holding for the long haul as it helps fuel the new nuclear power age. So that does it for me in this episode of Top Stock Picks here at Zacks. Make sure to check out our Zacks.com/promo page for a look at some of our services, portfolios, and more.